Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk about some of the key events that are coming our way this week, some of the key markets, some big-time levels. I'm here to answer any questions that you may have. We've got some serious news items that are really impacting the global markets. U.S. government shutdown rolls into week 3. That's really beginning to have some teeth and bite into economic projections. We've also got sort of some fresh salvos in the U.S.-China trade war. An interesting one today was soybeans. I don't think anybody had this happening, but China actually pulling all soybean orders from the United States. So if you're trading soybean futures, well, if you're on the long side of it, you probably did pretty well today. And then also the natural gas situation. We have a pledge from the EU to stop buying Russian natural gas by the end of 2027, and it's been just an explosion in price action for natty gas. So we've got that. We've got the Bitcoin recovery. We had a pretty good level on Bitcoin that came across the board on the big correction. So I'm confident everybody weathered the crypto storm and you're back for more. If you didn't, that's okay. These are big-time washouts, and I'm going to go over exactly what happened in crypto and maybe how we can attack this market moving forward. U.S. oil is going according to plan. I mean, it really is going according to plan. We had a trade idea out earlier today that I'm going to go over, but it was a fantastic sell-off that we've seen today, down about 1%, a bit of a bounce off of $56, but we're headed right down to yearly lows, and I think we timed this up pretty good, and I think we had a pretty good read on this market. So if you're interested in maybe talking a little bit of crude oil, I'm more than happy to talk crude pretty much any time, any day of the week, day or night. I'm more than happy to talk crude oil. That's my specialty. All right, everybody. So welcome back. It's for the week ahead, another week, week 43. Can you believe it? Ahmed, good to see you. Ahmed, always welcome. Yes, sir. Team Arena. Hey, guys. How are you? Ralph H. Good to see you, Ralph. Welcome. Lita, always a pleasure. Lita, Tuku in the house. All right, guys. We've got a lot going on today. I want to start with Bitcoin, though. Really a fascinating market dynamic. I got a couple of messages from late last week that were, Shane, I got caught with on the crypto. I mean, I don't know what's going on with the crypto washout. We saw the tariff saber rattling and the escalation between U.S. and China. A lot of it had to do with rare earth minerals being used in chips in the chip making industry. Everybody took a step back and said, where's the tech going to come from? And believe it or not, I mean, crypto's been around for so long now that we almost forget it's technology. I mean, at least I do. I go, oh, that's Bitcoin. Well, what runs Bitcoin? Technology, computers, computing power. So when we start to see anything threatening the tech sector, you start to see big pullbacks in crypto. Well, this was a good one. I'm not gonna sit here and sugarcoat it. This was a deep pullback. There's your monthly chart. We're gonna go down to a daily in a second, but the low is right around 103. 103.530. We were looking at this 106 level as being very juicy. 107 and a quarter. Got pretty good trajectory back up above that zone, but this washout was fairly ugly. So if you're down, I mean, let's just take it right down to a daily. Absolutely beautiful price action, but this was really a big-time sell-off back on the 17th, which was Friday, and then you saw the weekend. What happens over the weekends typically in crypto? Not every time, but a lot of times you see volumes die down. But what happens to markets when a volume dies down after a big sell-off? Typically they rally. There's an old adage, and it says, never sell a dead market. So when you see the volumes go down after a big move, especially a bearish one, typically you do see a buyback. We call that a little bit of accumulation, especially off a key level. This key level is fantastic, but this is one of the problems with trading these levels. When exactly do you pull the trigger on getting out of that trade? I mean, the high on that day was 109.261. We knew there was going to be some bearish action if we broke 110, and then we sold off right down to 103.5. So that was a major sell-off, but you only ended up down about 1.6% on the day. But look how bad the damage was. At one point, we were thinking, when we were at 103, I said, we're going to 100. I said, we're going to bounce off 100. We might even go down to 99 or 98 and then rally. We didn't get there. This is still an extremely bullish market. I think that this is the type of thing that ruins retail traders. A lot of folks, we talked a lot about, do I buy 120s? Do I buy 115s? It's like, you got to really wait for a technical or a big round number. The big round numbers we were looking at was 110. You could see really a fantastic battle was fought at 110 before that was taken out, and now we're back above 110. Very bullish here, still very bullish towards Bitcoin. I think that it's a fantastic asset probably to be long, at least for the remainder of the Trump administration. Very pro-crypto, a lot going on, but that was a big-time washout and a bounce. So the question that I will undoubtedly get, so I'm just going to save you guys the time for writing it to me, do I buy Bitcoin right now? I don't think so. I think we wait. Let's just wait a little bit. U.S.-China trade war definitely sending ripples through all of our crypto. We've got a pretty good bounce back going today. Ether back up right around 4,000, even though we're off on the session. Nice rebound to 4,000. Shiba Inu up around 10. I'm watching Shiba closely. We might be getting involved in Shiba here relatively soon. Dogecoin's up about 2%, right up around that 20-cent handle. And Bitcoin's right up around, 111, 110. So a lot going on in crypto. I'm still bullish. I'm still very bullish, especially when it comes to Bitcoin. I do expect us to return to 125, and I think it happens relatively quickly. But I have to say, if you guys caught this dip from right around 105, and if you got the absolute bottom down there at 103, I mean, that's fantastic. You grabbed a quick 7% in just a few days, and that's absolutely well done. So if you got that dip, absolutely fantastic work. For right this minute, we're going to have to wait. I'm going to have to wait. I can't just say, hey, we got to dive in there and buy all the crypto we possibly can, because a lot of times we have great ideas, but we just don't have the staying power. And if you don't have staying power in a market, you're really selling yourself short. You got to be very careful taking positions from bad trade location. We will get a great trade location in Bitcoin. We kind of already got one, but it was a tough trade. It was hairy down there, so you got to really watch it when you're trading these type of risk assets, because the volatility is incredible. Always trade what you can afford to trade. Always do that. If you do that, you're going to be just fine, and that's relatively important when we're talking about something as volatile as crypto. Your leverage needs to be dialed in. If it's not, you're going to get shaken out of a lot of really good trades, and I don't want to see that. I've been there. It happens to all of us, getting shaken out before the market bounces back in our favor. We need to make sure that happens to us as little as possible, or else it becomes really difficult to be a positive mindset trader, and that's what you have to be. So let's see who else we got. Tina, good to see you. Tina, welcome. Ruben, good to see you again from Nigeria. All right, Ruben, good to see you. From Montana. I got the big sweater out. It's getting cold up in my neck of the woods now. I was out watching football. I had a football game this weekend, and it was cold in the morning, foggy and cold. So I'm already shifting gears into wintertime. Got to keep the diet together. Diet, it's always the toughest thing in the winter. When it gets cold, you want to eat and you want to sleep. So I got to figure out a way to manage sort of my cravings when we get the cold weather, that's for sure. Team Marina, they rebound. Yes, they do. Yes, they do. Big time rebound there. Good to see you. Let's see, Ralph H. Good to see you there. Dave F19. Always a pleasure. Dave, Andrea. Hi. Happy Monday, Shane. Happy Monday, Andrea. I'm confident everybody's ready to roll for week 43. We are getting down to the end of the year already. We're going to talk about our schedule moving forward. I should be in the saddle here for the next few weeks, and then I got a few things I'm going to do towards the end of the year, but we will be in and out streaming pretty much every day. So I'll let you know when the time comes there. But we've got about another month of premium trading. And this is the time of year that if we're going to make moves, we make them. Now, up to this point, if you've been in this since January 1st, you should be relatively positive on the year. I mean, you should be, in the old days, you'd start in January and you'd be working towards your goal. Right about now is when we should be really way ahead on the year. And if we're not way ahead, we got a new year starting relatively soon, so we just got to work towards getting consistent and positive. But this time of year, this is what the traders, the old pit traders and a lot of the new traders, this is the big push. This is the final big push up until Thanksgiving and then pretty much shutting it down for the rest of the year. Maybe come back and trade that December Fed meeting, maybe that week right in there. But honestly, the second week of December, that's the end of the trading year for the most part. So we're gonna be here though, don't worry. But we're running out of time, so it's good. If you're gonna go pedal to the metal, now is the time to do it. Let me see. Man, Great Britain, Japanese yen, to look on the pound. Absolutely, will do. Antonio, GG. Hey there, Shane. Hey there, Antonio. Always welcome. Everybody's welcome on these streams. If you have any questions at all, be sure to ask. All right, Great Britain pound guppy. We're going to look at that in just a second. We've got a few other ones that I want to get started with. Price action over on our MT5 platform. This was a trade that we placed last week, and it's been a seesaw battle. It really has been a seesaw affair. You can see our trend line here. We could really argue whether or not it's still relevant. One of the things that I was looking at, though, this Great Britain pound or this Euro Great Britain pound is this is our top side trend line. And I really liked the idea of sort of bidding this thing when we got a bullish close up above that zone and we bid the pullback to the trend line. Pretty good trade, not too bad. I mean, I thought we had a chance to hit our take profit here a few days ago, but now we're just sort of staggering around a little bit punchy and we're down a little bit on the trade. Is that trend line still relevant? I don't know. I think a person could do anything you wanted on this. You could let it run, which is what I'm going to do. I thought that, maybe shooting for the top of market structure up here was a mistake. You could definitely see, if we brought this down to maybe a 1-to-1, we probably got paid. I'm going to go ahead and just leave it up there at the top of market structure. This swing high, I think that's a pretty good target, topside target, but a very tight market. The Euro Great Britain pound's always tight for the most part. It will trend from time to time, but for most of the time, it's tight. And when it's tight in there, it's easy for us to get chopped to death. So right here, I'm still holding the longs. Is there any reason to hold the long at this juncture? Not really. The market consolidated. I mean, I'm just going to dance with the one that brought me here. But to be honest with you, that stop out point right there, I would be more than happy just to take that stop loss and move on to the next trade. These are trades that you get caught up in, and you take a position. You say, okay, we got a good move here. Had a pretty good pullback entry off our trend line, even though we sort of rotated around that trend line and questioned the validity of the actual technical area. Still got a chance to the long side. Probably should scratch this trade just because nothing's happening here. And we don't really have a tremendous amount of market drivers for this week that are going to make the pound move, that are going to make the euro move. So we've got to be sort of very cognizant about what's coming our way. I'm on the economic calendar. Something to think about there. All right. CAD yen monthly. There's a lot of you out there that are trading the CAD yen. I want to really sort of illustrate what's going on with this pair. Nice big move that developed sort of earlier this year, and then we've just been, not actually last year, a couple years back, June of 2024. Man, now time flies, right? This is a monthly chart. Huge compression zone right around that 108 area, that 109 area. Huge. Top side target, 110s. Big round number. Definitely been a lid on this market for like the last 18 months. But something like this isn't too bad in that if we do get a move and we get a sell-off maybe down there, maybe 105, somewhere in that zone, we could definitely build the case to bid this thing. Now, the problem you're going to have with either going long or short here, you've got major upheaval in leadership in the Bank of Japan. Not the Bank of Japan, but in Japan in general. A lot going on in Japan right now. And crude oil. Crude oil is really becoming a drag on the Canadian dollar. We're going to talk crude here in a second. But remember that correlation is absolutely hugely important. Crude oil and Canadian dollar positively correlated. Okay, as crude oil goes up, the Canadian dollar does. Why? It's a huge export, and really, I believe fossil fuels, crude oil, and natural gas, about 9% of that Canadian GDP. So when you're trading something like the CAD yen, understand that the volumes aren't going to be like a Euro USD, which we're going to talk about in a second. A Great Britain pound USD, the volumes are going to be less. So that means those moves can be swifter and larger. Understand the market drivers here. Bank of Japan, we know that they want to cut interest rates, just haven't been able to do it just yet and get back into a negative deposit rate. Leadership in Japan definitely wants the negative deposit rate to get that economy to grow a little bit. Debt problems facing the Japanese economy are absolutely staggering. I believe it's the highest debt to GDP rate of all the developed nations in the world. Be very, very careful with this pair. This thing, anything can happen. And I mean anything. So if I'm going to go ahead and trade the CAD yen, the first thing I'm going to have to do is find a different duration chart. This weekly, not too bad. Nice big sell-off and a nice bounce. Do you want to be long or short in this situation? I would have a real hard time being long just because of the way crude oil is really developing into that bear market that we've talked about for a long time. That's going to hurt the Canadian dollar. Potentially, because the BOJ hasn't been able to cut, potentially that would be a bearish market driver for this pair. So for me, it's just I'm sort of I'm not necessarily a one-trick pony. I know a few different ways to trade, but Fibonacci's are certainly my favorite. Back into that golden zone in the weekly, sort of get right down into where this tail was located last week. You probably could build a trade from 107 to the long if you want to be long. If you want to be short, do you short right now? I think it's just really difficult. A lot of consolidation, very tight market. I would sort of wish you all the best on whichever way you are in that market. For me, I want to see this thing move. Look at your retracement right down there to 78% almost perfectly. That's interesting, right down around 106.09, somewhere like that. But I'm looking at 107, somewhere in there, 106, maybe something down in this zone. But it's really difficult for me to actually give a sweet entry or what I would call a high probability entry on this market just because it's very rotational. Very rotational, but I know a lot of you are trading the CAD yen. So if in fact this is you and you're long or short, all the best on your trade. Understand what's driving this market: crude oil and uncertainty facing Japanese leadership. Very, very, very important that you know what's driving the markets right now. Uncertainty seems to be a major theme. So that's a good look right there at the CAD yen. Remember, if you want to trade any of these pairs, especially on that MT5 platform, head over to Switch Markets. They'll get you up and loaded. Thousands of markets, zero commission accounts, tight spreads, you name it. They've got it. They've also got a ton of bonuses out there. Remember to check your municipality on the specific bonus that you're interested in because the bonuses will vary according to municipality and local regulations and guidelines. Very, very important that you understand that. As far as what do they have over there, they got everything. We've got a free I would say lineup of new tools that I'm going to be demoing. I'm actually in the process of demoing right now. We're going to be making some videos and some content on these, but maybe towards the end, maybe towards the end of the stream, I'll run through and show you where to find those. A lot there, though. Really a lot of value added to the trader and something that you definitely want to look at. Let me see, Tina. The Canadian inflation report tomorrow as well, absolutely. And Tina, you remember the Canadians, or the Bank of Canada, went really dovish early with the rate cuts, and now not so dovish. Starting to become a little bit more hawkish. So we're watching for a lot of things to really develop here. I don't know about the inflation. I think just core CPI is going to be the tell. We're going to talk more about that for later this week in the United States. But in Canada, you're going to want to look at those core numbers because the energy prices have really come down over the past several weeks and really several months. That's going to make CPI, the inflation measure that includes energies, it's going to make it look a lot more attractive than it probably really is. A lot of the pros, a lot of the analysts and the economists are going to really be focused on core CPI this time. We're going to talk more about that as the week drives on. So, but great observation, Tina. Thank you. John, good to see you. John, hello, teacher. I'm not a teacher. I'm a trader. Teacher, right? My family's, my brothers and uncles are teachers. I'm a trader, but I'm more than happy to show you some things out of my playbook and maybe some of my psychology that we can bring into and maybe help you out a little bit. All right, we'll look at U.S. oil, and then we'll get right into that Great Britain pound because it is a pretty good place for us to start our discussion of the Forex. U.S. oil. I put this trade idea out earlier today. I got asked, Shane, what are these trade ideas? Are these signals? These are not signals. These are actionable trade ideas. And an actionable trade idea is something that I'm looking at on my radar. Now, I wouldn't be trading U.S. oil because I'm in the United States. I don't have CFD market access. I know most of you trade U.S. oil, and a lot of you trade WTI, which is located on our Switch Markets platform. The biggest thing you need to remember if you're going to execute this trade is just be able to locate where the yearly low is. So I'm looking to shade the yearly low. We're looking to buy quarters, 55 and a quarters. I think that's a pretty darn good, or 55.26. That's a pretty good area to take the long. So right now, U.S. oil is bearish. There's no question about it. We're coming off big. This was a month that, we're down about 9%. We were down 10% earlier on the month. I think that we were dialed in pretty good on this market this month. And it's not rocket science. Remember, I know I talk fast, and I know a lot of you are just joining the markets, and you don't have a background in traditional economics, which I have. I know a little bit about that. I have a degree in that, but also I've been in the markets for 15 years, and I talk fast, and I can be confusing. Remember, this stuff does not have to be hard. It really doesn't. Energies are going to work two ways. Number one, anything you refine, okay, crude oil is a big one. Crude oil, you refine into diesel, gasoline. Those are the primary demands for diesel and gasoline are logistics, travel, things like that. So that demand in the northern hemisphere, which is a majority of where your financial centers and your populations really are consuming these fuels, are located. When you go into the winter months, the fall and the winter months, you're going to see those commodity prices drop because the projected demand is going to be lower. We don't believe that we're going to use as much crude oil. We're not going to need as much crude oil to refine into gasoline and diesel because the consumption is going to be down. It's not hard. Wintertime comes around, fall and winter comes around. Typically, you see a lot of net selling, net short positions in WTI crude oil. And when you see spring and summer, you see the long positions and the bidders step into those markets. Natural gas, which we're going to have a big discussion on here in a second, is a lot different. That means that when you go into the spring and the summer, natural gas consumption, or at least pricing, typically goes down. At least it doesn't go up. That's changing with AI. We're going to talk more about that. But as we go into the winter, at least in the northern hemisphere, the winter months, you're going to see more consumption, more bids hit natural gas in anticipation for increased wintertime demand. It's pretty easy. It really is. It just takes a little bit of time and a little bit of thought, and you're there. As far as 2025's low, that's a big time level here. For WTI crude oil, this is the U.S. oil CFD, 55.15. I expect that to be washed away. I really do. But before it gets washed away, we have an opportunity to really scalp. We know the bidders are there. So you've got a spike low there right around April. April's low, the tariff panic low, okay? You've also got May's low. And now what are you approaching? That 55 zone. That's sort of your yearly low. A lot of folks are going to step up and say, Shane, the seasonality is a secondary factor in this sell-off. This has all to do with tariff wars, U.S.-China trade wars, and you've got a point if that's your argument. You really do. In my opinion, though, sort of the trade war occurring during the fall seasonality, it's just throwing more fuel on the bearish fire. It really is. So we're looking at that level closely. Check out that trade idea if you're interested in playing a little bit of WTI crude oil this week. I think it's going to be a pretty good one. And that one's, I believe, for 58 ticks, 56 ticks, something like that. Let's go ahead and read the trade idea. You can get these over at howtotrade.com. You just go in and check out our analysis thread, or you can just click on my picture and it'll be emailed to you directly. That's for sure. All right, so let's go ahead and take a look at this week's schedule, and then we'll get right into that Great Britain pound. That was a good question. I don't want to forget about that. Great Britain pound guppy. What we have this week is an interesting one. We've got the U.S. government shutdown, which is going into your third week. It's a big time event, and it's becoming more and more of a potential market driver. Now, initially, I didn't think much of it. I said this is politics clearly, and it is clearly politics. We've got reports that we think the trade war, or not the trade war, but the government shutdown may be over this week. A lot of folks believe it was just sort of held over through the weekend for the big protests that occurred all over the country. A lot of folks believe that was why that they left the government shut down. But the bottom line is this: they're voting on the bill every day, and it's not passing. So if it's not passing, then we have to just figure that it's not going to pass anytime soon, because those party lines are really dug in deep, and somebody's going to have to give somebody something somewhere in order to get the thing going again. So that's a big time event that's developing into a major financial story that could bring about an economic pullback. More on that later this week. It's a big topic. In any case, week 43, this is what we have. T-bill auctions today. We're going to talk a little bit about those yields. Tuesday's quiet. Not much going on tomorrow. We're going to go ahead and have a Tuesday strategy session. Bring your questions. I will cover all the markets where we see the exposure, where I see the exposure, and I'll give you my personal thoughts and levels and things. We can do that. But any question you have, bring it tomorrow. Bring it today if you've got one today. As far as Wednesday, EIA crude oil inventories, that's going to be a pretty big deal this week because of the bearish nature of crude oil. We want to see if those U.S. supplies continue to grow. That's going to be more fuel on the bearish fire. It's going to be fascinating to see this week's numbers. I really see us testing that 55 zone relatively soon. Maybe not today, though. Pretty good bounce going on right now intraday. That's a big one. Thursday, weekly jobless claims. Now, supposedly these jobless numbers may hit news wires, but those are government numbers, so we're not going to hang our hat on that. We don't know that for sure just yet. But if you do get a weekly jobless claims release, it's going to be of added importance because we haven't seen the NFP figures. Friday, U.S. Consumer Price Index, CPI. That one is locked and loaded and ready to roll. That's scheduled. The government, even though it's shut down, they brought back the BLS to do the CPI numbers, the inflation stats. The reason why that was done is because they adjust Social Security payments and government benefits according to the inflation rate. So they have to have a baseline. They have to have baseline data to make those adjustments. They brought that back, is being viewed as an essential service. So we're going to have CPI live for you Friday. Can't wait. We're going to see some major volatility on that release, and I mean major. As far as today's fundamentals, the news of the day is going to be a 3-month T-bill auction, 6-month T-bill auction. You can see those yields came in at 3.18 and 3.66. The yields are down because we believe that rate cuts are imminent, and we're going to see a very, very dovish Fed. A lot going on there. Dovish Fed, what does that mean? Weaker dollar, 100%. We'll get into that a little bit later this week, but that's what the long-term bond holders are pricing. That's what the long-term debt holders are pricing. You're seeing yields go down, and that means they expect a dovish dollar and more dollars in the system. Absolutely a huge deal moving forward. I think we're in a fascinating rubber hits the road type of a period in finance. So I'm excited about it. As far as China goes, China's GDP came out during the overnight. These numbers are important because of the trade war that is escalating right now. GDP right there, year over year, Q3, 4.8%, and then GDP quarter over quarter is going to be 1.1%. So we showed growth, but it's sort of it's not as strong as it was, right? 5.2% down to 4.8. So even though you have a strong growth GDP-wise, it's not necessarily where China's GDP has been for a long time. That's being viewed as sort of a bearish signal, and perhaps that growth is slowing down, even though it's still extremely positive. Remember, Chinese GDP isn't U.S. GDP. It's not Great Britain pound or UK GDP. It's not Eurozone GDP. It's China GDP. So typically you expect those numbers to be a lot higher just because China's been in a period of really GDP growth for quite some time. And a lot of that has to do with trade practices and all these different things. Very difficult. We don't need to get into that for today. All right, let's do some trading. Great Britain pound, Japanese yen. This one goes out to Ahmed. Ahmed, the big thing that been stuck on in this market forever is the 200 level. I mean, really, this is a long-term look. This is a monthly chart. 200 is the key level. No question about it. So we've broken above that zone now. We're up right around 202, something like that. So if we're up at 202 and we're down here at 200 as our key level, for me, it's relatively straightforward. I want to buy 200s. We've seen the break. We see that the sellers are no longer there right around 200. So what does that mean? It means that potentially we can grab a nice bid. Now, the other thing that I really like about this is your weekly 13-period EMA is right up there, right around 199.95. That really makes 200 being a real strong bidding possibility for me. We throw some Fibonacci's on there for good measure, and you can easily start to see what we're dealing with. We're dealing with a fantastic zone right down around 200. So what do you have? You have 250, 200.50, probably a big level. Back into the golden zone, beautiful. You've got an EMA right there at 199.95. That's hot. And 62% at 200 and the key level at 200. I mean, you really, really like that zone. So if we're fortunate, we get a bit of a pullback this week, which we may get it. I mean, it just depends on if any news breaks really out of Japan. That's what I'm looking at. If we do get an opportunity to trade that level, that's a pretty good one. Probably one that you don't want to ignore. 200, I would say you probably are looking to bid 200s, 0.50, 55, somewhere in there, and have an opportunity potentially to send this thing skyward. I think that could be a good trade. That would be an accumulation trade. We're looking for a lot of traders to step in and just sort of bid and hold the line right above 200. Could be a good area. That's one that I will be looking at. But again, you have to make your own decisions, and you got to do what you got to do. But that, to me, Are we bullish still? Yeah, we're pretty bullish. I mean, we broke above 200. That's bullish. Rotation last week, what was last week's low? About 268. So you can see what I mean. If we wash out beneath last week's low, we'd have a fantastic opportunity to bid that thing. That's for sure. Good question, though. Absolutely. As far as Great Britain pound goes, Great Britain pound US dollar, let's go ahead and check that one out. We're trading 134.10. For me, it's really difficult on a weekly chart. You can see we're in a non-committal area. We're sort of between. Anytime price is between my moving average and my Bollinger midpoint, it's flat. And right now we're just sort of rotating around 134. I've been a big fan of this deeper pullback for a long time now. I think that we'll probably get it by the end of the year. I was really confident that we were going to get it a bit earlier this month, but we didn't. And I just love this level down here, 13-month EMA, 131, 131.75-ish, 70-ish, and then 131.50. But, man, we're about 240 pips north of that. So maybe on CPI we'll get a chance down there, but I highly doubt it. As far as your daily chart goes, just rotation. I mean, I can build the case to go long right now. I really can. I would really limit this to being a low-risk trade. I don't want to get too involved with that because we have CPI, and I have a feeling, I know CPI is going to shake things up. Your low down there is 133.85-ish. So if you wanted to scalp, you could probably step up right around that zone and maybe bid. I'm not overly confident, though, about taking a position either way on this market. It really feels like we're in a state of equilibrium, meaning price is just sort of chopping sideways. I want to see a move. If we get a move and establish that disequilibrium in the market, essentially the market's out of whack, then we can step up and capitalize on that market being out of kilter and really play something back up towards a value area, which we know we have at 134. So for me, if you want to scalp, knock yourself out. Risk versus reward, tight. We're not looking to catch a huge breakout here. Profit target, modest. We don't want to get caught up in sitting around waiting for the huge runner to come in because it may not. Be very careful with this market because it is flat. But if you wanted to, if you're going to take a position this week, say, and the market doesn't blow down and give us a chance at a really, what I would call our money level down in here, 62%, the back end of this golden zone right around 133.50-ish. No, not 133.50, 133.35-ish. Somewhere right down in this zone could be a fantastic bid. All right, let's see. We got a question here, and then we got a whole bunch of markets to cover and still some news. This might be a long stream, so if you have to watch it in two parts, that's fine. Let's see. Team Marina, China is still benefiting from being considered a developing country. 1,000%, Team Marina. China was given favorable treatment by a lot of global leaders, a lot of folks in the EU, a lot of folks in the U.S., and that commerce really, all roads went through China and still do in a lot of ways. So when we talk GDP for China, it's not like GDP in the United States or the UK or the EU. It's expected to be much higher. Is it a developing nation? Depends on who you talk to. I find that hard to believe. Some of the cities, if you're from that region or if you've ever been there, I've never been to the Orient. I really look forward to it. There's talk of maybe getting a Japan trip going. I would love to go see that region, really that part of the world. But I've seen some of the things online about the cities in China, and they're absolutely stunning. Some of the pictures are just unbelievable, and they look very, very advanced compared to a developing type of a label T. So I think you're absolutely right. It doesn't look developing to me, but I've never been on the ground there, and I just don't know. But I would love to go see it maybe someday. Go to Macau or something. Go check out some of the lights and things. What markets are affected by that? Yeah, as far as China GDP, the biggest thing that you would look at by us, or biggest takeaway from that, is I would say if you see the big contractions in that GDP, that means you can start building a case on that trade war. Who's winning the trade war? It doesn't really matter to me. I don't want to have a political argument. I just don't. I'm tired of it all. I'm tired of the politics and the constant, this way or that way. I read a bunch of news items this morning, sort of prepping for this stream. They were all saying China was winning the trade war. Yet when you look at a number like GDP, and even though it's still big, it's contracting. It's contracting from where it was. So when you have a quarter-over-quarter loss of about 0.4% from 5.2 to 4.8, you're still growing. Technically, you're still growing, but you weren't growing as fast as you were. And when you're sort of trying to figure out what's happening in an economy like China's, you have to say, okay, well, I know that the GDPs are always going to be higher relatively speaking. If they're not growing as fast as they were, what does that really mean to the economic strength? And I think that's what everybody sort of took away from that number. So how does that impact the markets? There's an idea that if things go bad in China, it really does signal a global economic slowdown. I probably would tend to agree with that. So that's what you would take away from it. You'd be looking at China as sort of not the canary in the coal mine, but a leading indicator of maybe what's happening in other places, maybe potentially being a leading indicator of what's happening in the United States. If commerce slows down between China and the U.S. to a crawl, what happens to the global economic growth? The outlook's going to be very, very challenging to predict. It really is. And that's what the IMF essentially said all last week. It was uncertainty, uncertainty, uncertainty. We just don't know. I'd say, okay, well, if you don't know, call me when you know. All right, Euro USD. I just want to take a quick look at this. It's going to look a lot like the Great Britain Pound USD that we just saw. But something like this nice spike low and sort of a spike high there. For me, the monthly, I mean, these are the levels you really want, and it's the same as the Great Britain Pound. It's just we're nowhere near it. That's beautiful convergence right there. We've got the 13-period EMA at 112, or 13-month, 112.62. And 112.52. I mean, that's a fantastic zone, but it's 400 points off. So I get it. I get it. Are we going to get a shot at that this year? Maybe. I doubt it, but maybe. As far as how do we trade this right now, we really aren't sort of what I would call, it's not a flat spin, but it's definitely, we're just sort of rotating around 116. So if I was interested in trading this on short time frames, I could probably take it down to a weekly and say, okay, what do I want to do? I mean, look at how tight this Euro USD's been, and it's been that way going back to August. Very tight, very, very tight. Right now we're trading the 13-week EMA almost right on the nose, 116.47. The EMA is at 116.54. You probably could just take a short right now and try to execute a real tight scalp. For me, I wouldn't touch this. This is way too tight. If you're long, great. If you're short, great. Just manage your risk. I mean, that 4-hour chart is really difficult. I don't, if you're short from up here, maybe 117, you just played a key level and sold down, I'd say great. So what would be the next rational move? Would be to buy 116s. But the market has to move first. That thing is slow and it's very, very flat, and it's tough to trade that stuff. Tough to trade that. Makes sense, Shane? That's the idea, T. I could put my economist hat on from time to time. Sometimes it's good, sometimes it's bad. Always remember this about economics in trading. You're a trader. If you're here, you're more than likely a trader. Now, there's some folks that watch this and they sort of want to have an economic diet. I don't know about, it's not diatribe, but just dialogue. They want to say, well, what about this economically? I want everybody to be very clear. When we trade, we're playing for dollars and cents. When you make money, you make money. When you lose money, you lose money. Economists are into something completely different. They're writing books, they're putting out dissertations, they're making projections and analyzing market conditions. A lot of them don't trade. Matter of fact, most of the academics don't trade, at least with very limited success. So if you want to be an economist, that's great. Read the books, do the studying. Will being an economist help you in your trading? Nah. I don't think you need to be an economist to do it. Basic economic tenets? Absolutely. The seasonality thing that I just told you, that's sort of an economic tenet. Probably should know that if you're trading commodities. Very, very important. As far as, do you need to know what GDP really is to be able to trade like the Chinese yuan? No, you don't need to know that. You just need to know which numbers move the markets, and we're sort of here to help you with that. This week it'll be CPI. That'll be the big mover and shaker in anything on the trade war front between U.S. and China. That's what's going to move the market. Let me see. Lebo, good to see you. Lebo, welcome. I'm doing very well. I'm confident you're doing well. All right, we got a few other things that we need to cover here. As far as our news goes, this is interesting. You've got all sorts of, scuttlebutt and all this stuff. Right here, this is the one I was looking at earlier. White House Economic Advisor Hassett says shutdown could end this week, so they must know something. They must anticipate that this thing's winding down. Like I said, a lot of us, I listen to all media sources. I listen to mainstream. I read message boards. I'm unfortunately on X way too much, but I don't like to spend any more time on there than I have to. And then also you've got all sorts of different media, podcasts. It's important that we really take a look at the full gamut of information, and I have a feeling that there's a deal in the works to get this thing restarted. And so we're going to go ahead and see. As far as I tend to agree with what Hassett said right here. He suggested Democrats are waiting to vote to reopen the government until after this week's nationwide No Kings protest against Trump. And I think that's accurate. I don't think they were going to reopen the government with those big protests going on. And it's arguable how big the protests really were. I can tell you that they were all the way out here in Montana. So if they were protesting here in Montana, I'm pretty sure they were protesting everywhere. So you definitely want to be aware that now that stuff's over, and it really was a political function from sort of the minority folks that are not in control in Washington, D.C. Right now, the Democratic Party is the minority party. They don't have any voting power either in the executive or the legislative. So, when we say minority, we're talking about political power. They don't have the votes. So a majority vote, the Republicans have enough to get the 60 to reopen the government? No, they don't. So you're going to need a few of those minority votes to get in there and actually kickstart the government process, I guess, the reopening process. So that was sort of what these protests were about, very political, and they were from majority Democratic supporters. Whatever you think about that, I don't really care. It looks to me like it was relatively peaceful. I don't know, though. I didn't go to any of them. But I think the shutdown could be over this week. I would be surprised if it goes another week. So if I'm betting right now, I would say, yeah, you're probably going to see it reopen later this week. Trade war news, this is absolutely huge. The soybean market's going crazy right now. I'm watching. It's up about 1.39% on the session, which is a big move for soybeans. This was really huge. Outlook, China's economic growth slows amid trade war. That was sort of the GDP thing we just talked about. China borrows all stuff. China's found Trump's pain, rare earth minerals. That's where the leverage is. But the big thing was soybeans. China buys 0 U.S. beans for the first time in 7 years as the trade war intensifies. So we are seeing the trade war rhetoric and tariffs and things really starting to blow up a little bit. And right there, what do you have? Up about 1.39%. So a nice big rally today in soybeans. That sort of suggests when you see a chart like that from beans and you see China decide that they're not going to buy any soybeans from the United States, that's a major escalation in the trade war. Now, does that mean that the escalation is driving gold and silver higher? Maybe. Commodities are going crazy except for energy. That's sort of different. This really is a lot of really trade war driven. Even though risk assets are up today, your commodities are up as well. And the dollar, nothing's happening there. So we're going to look at gold and silver in just a second, but this beans chart is really something. I mean, that is a major break. If you want to go long-term cash market soybeans, what do you have right here? Yeah, really, an absolute monster number. The top side, about 1,072, so something like this. And I don't recall right off the top of my head how soybeans are priced. I know they're per bushel. I don't know, what is that? That might be in pennies or something. I genuinely don't know, but I'd have to look it up for you. But something like this, you've got really the double top right there. I mean, I just draw a line in the sand. If you're a technical analyst, right there, right around 1,075, I would say that's potentially topside resistance. So if you're selling beans or if you're trading beans, beware the news cycle. But it looks to me like you're going there. You're going to test out. I mean, those are what, yearly highs up there? And also, you got a nice order block area right there back in September of 2024. Big time level up there. That's a yearly high, and it really is sort of a quadruple top. If we break above that, which on the news we probably should, we'll see exactly how high soybeans go. Should be interesting, right? Let's see. Natural gas. One last thing I want to cover here, natural gas, then I'll take your question, Blue Mango and Lebo. As far as natural gas goes, we have just a huge breakout today, and the reason why is the EU nations to close in on deal to ban Russian national gas by the end of 2027. That's absolutely a huge news story, and you can see that it's translated into a big break in natural gas. So when we're looking at exactly what's happening in the commodities markets, two very different things, at least in the energies markets. Number one, you've got natural gas way up, potentially a buy setting up here on our coded 920 EMA. We've got our 9 EMA, which is our red one, crossing over our 20. This is a daily time frame. This is going to be a very big deal here for natural gas. So if you do get that buy, potentially that may be an opportunity to send them long. I'm watching this closely. We may have a trade idea out for natural gas later in the week. I don't necessarily like to trade natural gas much, but I'm always monitoring it. I'm always taking a look. From a macro picture with natural gas, just briefly, you can see sort of there's your gap up. But from a long-term standpoint, a monthly, the technicals are very clear cut. They really are. right there. There's your major spike right up around your Russia-Ukraine. Russia invades Ukraine, and that's what happens. You're right up around 10. Natural gas goes to 10, and then it absolutely crashes over the subsequent months, and then you go down to a low of about 1.5. I mean, that's amazing price action. And we really did call this top pretty well, 4.745, right up in that zone's topside resistance. This is the kind of market driver, plus the time of year, we could definitely be revisiting those 4.75 areas. So if I'm looking at something like a natural gas market, I probably want to get long. How do you do it? This 920 will give you a decent opportunity potentially to do just that. I'll be monitoring this closely. As far as taking it to another time frame, we can do it. I mean, if you want to do it, we could certainly go down to, say, a 4-hour. I'm not a big fan of that at all. I'm really not. But if you were, there was your crossover on the weekly open. And then since then, it's just been really a beautiful thing to the top side. So we're going to be watching this closely. I'm watching the daily. Would you buy right there on today's close? It's going to be risky. It may be better just to wait for potentially another pullback, something like this, maybe a pullback down to 375, something like that. We'll be watching that closely. Keep an eye out for our Switch Markets newsletter. That'll have our picks of the week in there, and one of them will be natural gas. So we will be looking at that for sure. All right, a couple more markets, and then I will definitely answer your question, Blue Mango and Lebo. I just want to cover a little bit about what's happening in gold. I mean, I told you we had a lot to cover today, and we do. So 42.50 in gold really has just exploded past that. We had a pullback to that zone, and now we're moving higher. So what do you have here? Your all-time highs are right up there around 43.79. In my opinion, you're going to 4,500, and we're going to be lined up to take that short right in front of that zone. Probably have something out a little bit later this week, maybe tomorrow, but maybe something like that. I mean, that's going to be a really difficult trade to beat, something like that. I don't think you have to hang on to 45.81, but you could probably bring this down to 40. If you wanted to take a position, you might be able to do that. I wouldn't go that far with it. I'd be doing something like this more. If you were going to take a big trade, something like that, you stop yourself out like 45.29. If you're going to take a real tight scalp, 45.09, something like that. That's probably how we'll approach the trade. As far as a pullback, you could definitely see for a pullback down there $100. You could easily see that. You could also bring this thing up maybe up into here, keep this maybe a 2.5 to 1, something like that. Relatively strong trade in my view, and we'll have that outlined perfectly. Not perfectly, but we'll have that probably a little bit later this week. Definitely ahead of the CPI report. So, what do you want to do with gold right now? You really do want to buy it. 4-hour chart, spike low, spike high, something like that. That's pretty good. That's pretty juicy right there. 43.05. I mean, right now gold is moving and it's moving and it's moving. So the ranges are huge. There's a lot of money. There's a lot of money in metals right now. So if you're trading it, be patient for a good trade location. You want to buy, but you want to buy pullbacks. And if you're going to sell, I would be very careful. A lot of folks are going to sell right off of this swing high in front of the all-time highs. It worked right here. I remember we had that discussion last week. Really great trading there. If you wanted to sell and sort of use that ICT concept where you're looking for the liquidity sweeps, the swing highs, top of market structure, potentially you could sell up there. Just be very careful and keep your leverage within the realm of possibility. Don't get overextended. But also, if you're going to cut the trade off with a stop loss, you're probably going to want to be like right up in here. If price breaks above those all-time highs, you don't really want to be holding shorts as gold's making new highs. If you're doing that, you're probably wrong. And the reason why is you're trending up hot. There's absolutely no way that we can project the top of this market right now. In my view, an intermediate term top is probably going to develop around 4,500 or 5,000. And right now we're so strong with our price action to the bull, I would be really surprised if we don't go to 5,000. We called 4,000 a long time ago. I thought it was going to take a couple of more months to get there. It did not. This market is really strong. So if you're going to go short, you can do it. Keep a tight leash on it. Don't let this one get away from you. Don't let it blow out your trading account. We don't want that. I don't want that. I think that would be a really, sort of a bummer. Sort of a bummer, right? Silver, much the same way. 52. I mean, this has just been an explosion in price action. We talked a lot about silver, all the different ways to trade it. For me, relatively simple. Go to a daily. Major sweep. That was a major one. That knocked out a lot of retail longs, no question about it. And that typically is how markets work. They'll go along, and then knock you out. And now you're back on the bull. So to me, I still want to be long. Something like that. probably pretty good trade location right now to the long. You just have to figure out exactly how you want to approach it with your risk reward and what you're looking for. 55. We talked a lot about 55 being a key level. Look at what sold off, 54.47. Now you're looking at probably 57.50. We're looking at 60s. There are no rules on how high these metals markets can go. So don't sit around thinking, all right, 55 is the top. I'm going to sell the ranch. Well, I hate to say it. If you do that, I hope you're right. But, hope is tough. You know what I think of hope? You can't trade in hope, really. If you find yourself hoping your trades come in, you're in trouble. Don't do that very often. Okay, we got a couple questions here on the live chat. I appreciate your patience, Blue Mango and Lebo. Let me see. Hi, Shane. I'm not sure if this is the correct time or if I should rather email you this question. Is stuff like Z-score, profit factor, Sharpe ratio, etc., used full to look at with intraday trading? A lot of folks do. A lot of folks use the Sharpe ratio. Matter of fact, there were some prop firms out there that would the Sharpe ratio was a part of your evaluation process. In my opinion, there's like one thing that's important with intraday trading, and that's, are you making money? A lot of people don't believe in that. They believe you can use these statistical methods like Z-score, Sharpe ratios, and all that to evaluate your performance in intraday trading. What I would say is, be more than if you want to do it, go for it. Bring those statistics in and see where you can actually fine-tune your profit, or not your profitability, but your performance. If it shows you weaknesses in your trading, then yeah, do it. But if you think that you have to do those really advanced statistical measures to be a profitable trader, I wouldn't worry too much about that. What's important, and even your wins and your losses aren't really important. A lot of folks love to keep a track record. I do, just because I'm sort of a sports fan. I came up in the sporting arenas, so I was like, I've always got wins and losses in my head. What's important is profitability, and that is important. Making money is the most important thing. So all your technicals, all your evaluation tools, your statistics, all of it doesn't mean anything if you're not making any money. The scoreboard is kept in dollars and cents or euros or pounds and whatever. Dollars and cents and pounds and pence. That's how we keep score day trading, intraday trading. That's how we keep score. And if you're negative on that scoreboard, you need to find out why and fix it. If Z-score and Sharpe ratios help you do that, then rock on, go for it, do it. Let's see, Lebo. There's a certain broker whose name I will not mention that bans their traders from trading U.S. dollar-based currencies and U.S. indices every time a major news event happens. News events like CPI and NFP, it's not uncommon, Lebo. The reason why is, and I can actually show you the emails that I get from my futures brokers, they absolutely jam. I mean, they take the margins from about 5% to 25% on the indices and things, so you can't really trade them unless you have a tremendous amount of money. The reasons why they do that is, remember what your broker does. Your broker issues you a good faith loan. What do you do to back that loan? You put up a little bit of margin and they give you a hell of a lot of purchasing power. Well, that purchasing power is how the broker is exposed in the market. So those huge volatility swings, if there's something crazy happens, like a black swan event, the broker's left there sort of holding their hat. They've taken the loss. You didn't take the loss. You lost your margin money. So now that the brokers sustain the loss across a bunch of clients, then they have to go start issuing margin calls. And if their clients can't meet those margin calls, the broker's on the hook. So if you're, brokers, that's very common, to be honest with you, Lebo. It's very common. Some of the biggest brokers in the world, don't worry about it. And also some of them will let you trade it, but you just have to deposit a lot of money with them. And if your broker is sort of shuts things down or limits your leverage, I wouldn't really be too upset about it. It's a high risk time to be in the market. I don't know many traders that nail news events consistently. Typically it's random and they get into trouble, but it's a good question, or it's a good point, Lebo, but it is common. Let me see. Ahmed, Shane, may I know more about the Great Britain pound and the UK 100, how to approach both in general with the news and the key things affect them? Well, I mean, we just sort of gave you the big levels for the Great Britain pound with the guppy, the Great Britain pound Japanese yen. So I'm going to leave that. And then also the USD, we're going to leave that too. We sort of showed you the Great Britain pound being very flat. I'm more than happy to pull a UK 100 chart for you, though. As far as what are the key events this week, I didn't see a whole heck of a lot that's going to move things. I think CPI Friday is going to move things. But remember, a lot of those releases out of the UK, unless you've got a BOE meeting, and I may have missed it, go ahead and double check your economic calendar. I didn't see any of that scheduled for this week. And let BOE moves it. But a lot of times that UK CPI and the UK GDP, they don't really move it that much. Move your Great Britain pound much. So I would be watching closely, probably US CPI this week. As far as the UK 100 goes, I'm more than happy to pull one up and just sort of show you what I think about it. So the FTSE, we sort of had our long-term chart right here. Here's a daily. Really went down and hit that 62, right down almost 78. That was a deep pullback and then a rebound. Those types of days are really difficult. If you catch the bottom, you make a bunch, but more than likely you're getting stopped out. And there's sort of the rally to the top side. So if we were interested in breaking this market down, the UK 100, I would just go top to bottom, monthly, weekly, daily. And something like this really gives you a good look at what you're doing. You've broken out to the top side here, no question about it. You sort of broke out here, but then had that major tariff scare back in April. That right there shows you what the U.S.-China trade war can do to the entire world right there. We're going into maybe another phase of that. I don't know. But in any case, right here. So there's your spike low. You'd want to buy a big pullback if you can get one. I just don't know that we get one. Maybe late in the year we get one. Tough to say. Go down to your weekly. What's going on in your weekly? Sort of disjointed price action. What I would call sort of ugly, bowling shoe ugly price action. It's just not that much fun. Last 2 weeks have been flat. Long-term bias, I would have to have a bullish bias here. I think the economic growth cycle more than likely is going to kick off amid the dovish policy coming in from all the central bankers. But something like this. See, do we have a spike low there? Low's 174.8. Yep, this right here is where we could build sort of our Fibonacci retracement sequence on a weekly time frame. Something down in there that's fantastic. 92.59. We've got a 13-week EMA down there at 92.46. That's fantastic down there. So if you wanted to do that and get involved in this market to the long side, that's probably the best area for this week. Now, do we get there? Probably not, but maybe. Then if we do, then we sort of just walk over, pick up the money, and move on. It's just difficult to really say what the market's going to do in the short term, Ahmed. So that's a good look, though, at the UK 100. Blue, thank you. Thanks, Shane. I appreciate you taking the questions. Absolutely. That's what I'm here for. It's an interactive trading experience, that's for sure. Let me see, Antonio. Regarding the last video where you covered the orb strategy, can I use different time frames? I've seen other people use 3x candles on the 5-minute charts. 100%, Antonio. We sort of said that, and I know I talk fast, but when I was going through those rules, you can use any time frame you want on the orb. I've seen traders use 1-minute time frames. We always talk about our charts sort of denominated in minutes and hours and things. Days. A lot of folks use tick charts, and I've seen 250 tick charts. To me, there's one rule to remember when you're using the orb, and that is the smaller your time frame goes, okay, the less your winning percentage is going to be, meaning you're going to get chopped up a lot more, and it stands to reason because that range is going to be very small. Now, I know why everybody wants to use real short time frames, tight time frames. And the answer is it's cheaper. We know where to put our stop losses and our profit targets, so we can definitely execute those short-term orbs feeling a little bit better because our stop loss is cheaper. It's just going to be a lot tighter to our entry. That's also the reason why we're going to get stopped out more. So I'm not saying that it can't be done. I'm saying go ahead and do it. You see a lot of videos out there, 5-minute orbs, 3-minute orbs, 1-minute orbs, 250 tick orbs, and that's great. If you can build one of those strategies into your own and make money, go for it. But you're going to get stopped out a lot. And if you're cool with that, then great. But just remember this one last thing I'm going to say about it. We could definitely talk about a way to build like 1-minute orbs and 5-minute orbs. And then as the day goes on, okay, well, this one got chopped out. Okay, now I'm going to go to look at the 15-minute, and then I'm going to look at the 30-minute. So I could execute one open several different times until I caught the break. It's not a bad idea. It's inventive. It's interesting. I like it. But remember this. There's an old saying, and I think it was Paul Tudor Jones, but a loser's a loser's a loser. And every day that you place an orb trade's not going to win. And I think that you'll find that when you get into those choppy, ugly days where you don't get a break, or the whipsaw days where you see the big sell-off and then the rebound, more than likely you're going to lose all those trades. So I would recommend picking a time frame that you want to do. If you want to pick 1 minute, great, go for it. You want to pick the 5 minute, great, go for it. Just be careful that you don't end up making the same trade over and over and over again and losing over and over and over again on a day where the market just doesn't move. It's better to take 1 loss and move on than 5 losses and sit there and stare at your account, believe me. So, but it's not a bad idea at all, Antonio. You could definitely go and get in there with those smaller time frames. Tina, is Australian RBA Jones' speech going to drive the market up? It's hard to say, Tina, because the Australian dollar, we were talking about the Australian dollar with your questions earlier today. The thing that I see driving the Australian dollar is gold. We're up 2.25% again, all-time highs. Such a strong trend there, it's difficult to bet against the Aussie right now. So for me, I would look at that and say, I probably think that no matter what, the RBA says, besides like a formal statement or a rate cut or a rate hike, I don't know that the comments are going to send the AUD directional. I think it's going to be more along the lines of the gold market, maybe the copper market. If you see all those metals moving north, that's a pretty good bullish underpinning for the Aussie. I think it's more important than what they say, unless they start adjusting interest rates. And remember, the subprime, it's not a subprime crisis necessarily, but those variable rate mortgages, those adjustable rate mortgages in Australia are a big, big deal to really not just the economy there, but to the political hierarchy. There was a lot of talk about, these higher interest rates are really hurting the variable rate mortgages, and because there's so many of them out there in the Australian sort of real estate market, that was sort of a big impetus to cut. So we'll see how it goes. Maybe if the RBA Jones says something about cutting rates to preserve not the subprime, I keep saying that, but the adjustable rate mortgages, then maybe that would be something that could move the Aussie. So I think you just have to watch it and see. I don't see that as being a big market driver at all, but we'll see. We can definitely see. All right, let me see, Antonio. I was just curious. Well, all right, we hope we satisfied your curiosity. I'm not. Well, it's an interesting idea, though. 5 minute orb. I mean, it's easy to back test. It really is. Just go 2 or 3 bars, build something that works. Just remember this. When you start back testing an idea like that, 2 or 3 bars on a 5 minute chart, and you're like, oh, well, it doesn't work on 3 bars. Maybe it works on 4 bars or 5 bars. You're almost backfitting the strategy to the historical data. Be very careful that you don't backfit when you're back testing. You don't want to do that. All right, everybody, I'm going to go ahead and sign off. It's been about an hour, so we ran way long today, but we had a lot to get to. It was an active news cycle over the weekend. Right now, natural gas is the mover. We're up about 15%, and the market's just absolutely exploding. So we're looking for fireworks there. That will be in our Switch Markets Picks of the Week video that will be coming out. And also, if you're a Switch Markets client, you will be getting, probably emailed, the newsletter. If you don't currently get the newsletter, probably reach out to your live support over on Switch. If you're a Switch client, you should be getting that every week. All right, everybody, I'm going to go ahead and sign off for right this minute. Big time session, good session. Stocks are just absolutely exploding. 500 in the Dow to the top side. U.S. oils, to me, is still the story of the day, at least for energy traders. That's not true. Natural gas is the story of the day, but the way that U.S. oil is behaving right now really shows that the bearish underpinnings are beginning to win. As far as the U.S. dollar, nothing flat today. I expect it to be flat most of the week until we get the move on CPI Friday. Other than that, that's a wrap. Okay, guys, I'm going to go ahead and sign off for now. You have a fantastic trading day. Have a great week. Trade the action well, and we'll talk soon. See you.